Typically, when we listen to the news, Twitter, X, CNN, we are overwhelmed by Trump and Elon Musk, and we feel like we are operating in a very volatile world. And we quickly convince ourselves that the world is very complex. But I want to assure you that the world has been very stable for the over the last year from the following point of view. If you look at the global economic growth, from 2000 to 2019, it was roughly 3.7% compounded on an annual basis. For the last few years, it's been just over 3%. It's predicted to be 3.3% for 2024-25. It's not shooting sparks, but it is stable. If you look at inflation rates, it has reduced from 6.5% in 2023 to 5.5%. It's predicted to go down to 4.5% this year and 3.5% next year. If you look at interest rates from central and reserve banks, we have seen easing of interest rates, and all of these things are generally supportive for demand, including commodities, including our PGMs that we produce. So from that point of view, the world in which we operate, in spite of all the noise, is relatively stable. What is true is that given the elections that have been in over 90 countries, and particularly in the States, and the whirlwind that Trump and his team has created, is creating a lot of uncertainty. We're seeing institutional uncertainty, NATO, we're seeing transatlantic trade relationships being threatened. And so all of these things have had a negative impact on sentiment. And that, on the other hand, is implying downward pressure on commodity prices. But actually, if you look at the commodity price performance over the last year, the dollar prices of PGMs has been almost entirely flat. I mean, the platinum and palladium has been at around $950, and rhodium has been at around $4,500. It's roughly there. I mean, it has moved down 3%. It is the strengthening of the rand by 5%, which for me is the negative in the brand basket price. So in the last year, in spite of what we may think, it's probably been one of the more stable periods that we have operated in. And I'm very happy to say that we have leveraged that. And our intention as a company is to create continual strength in the organization called Implats. So we have an assured but cautious outlook on PGM prices going forward. We see at the moment marginal deficits in all three of the major metals, in particular platinum. We see that changing for palladium and rhodium from 2028. Those two metals running into surpluses, creating increased liquidity. But platinum we foresee granted on the basis of a material increase fueled by the hydrogen economy as well as fuel cell electric vehicles. But we see continued demand for platinum to the extent that we see sustained deficits and therefore continued eradication of excess surface inventory. We do believe that there is going to be some switching between platinum and palladium that will offset the surpluses created by palladium. And of course, platinum is less reliant on the automotive industry than the other two metals. Our metals are unique. I mean, a majority of the great economic jurisdictions in the world have declared PGMs as strategic critical minerals, including Japan, Canada, the US, and some countries in the States. So I do not think that there is going to be a discontinued use or demand for our product. We have to be cautious of the long-term threat of electrification and secondary supply. But we believe that there's going to be a future. So against this backdrop, the intention of the company is to make sure that it not only survives, but also prospers at the current market prices. So if you look at the results for the last 6 months, it talks to achieving some of those ambitions. Our production was more or less stable, with refined production going up by 2%, sales going up by 5%. Our unit cost went up by 3%. I think that's industry leading for this reporting period. Capital came down 42%, 3.9 billion. And that's as a consequence of investment discipline being applied by the company. In addition to that, we have made operating strategy changes at a few of our operations, in particular Canada. I think we reported previously that we have amended the extraction philosophy to a higher margin business, so you will see a reduction in production, probably a more accelerated wind down. I mean, I think we previously communicated a 3-year wind down. We are continuously evaluating the performance of the business, costs, as well as palladium price performance. But to the extent that future viability or future cash flows are threatened, it will not be unsurprising that we will come with an announcement at some time in the future about potentially a more accelerated but responsible wind down of that operation.